Cool. Yeah. So this shows the global liquidity cycle. So this is basically running on a 48-month cycle, and this is showing since 1968.
Hmm.
So you can see there's definitely times of deviation. One of the ones that stood out to me was in the 2017 crypto cycle, when everything started exploding. We were seeing a deviation from this cycle, which makes sense. Like 2016 was whenever Trump got elected,
Hmm.
and he really changed a lot whenever he came in. A lot of people were very bullish on him as a president. They knew he was going to be wanting to inject liquidity. He wanted to expand the U.S. economy and the global economy. So a lot of people were very bullish on him. So you see this deviation from the usual cycle in 2017, 2018.
Uh-huh.
But you can see relative to the moves that we were getting on this chart in previous cycle tops, there it wasn't much. We got about halfway up compared to where we normally do. And the reason that we saw exponential gains in the 2017 cycle was obviously the crypto assets were a lot smaller in size. So it took way less money to move, especially majors
Hmm.
back at that point in time. Bitcoin, Ethereum, they were, 15th to 20th of the size that they are now, maybe even smaller. Then 2021, which was kind of a super cycle, that's whenever the Bitcoin halving year, the election year, and everything lined up perfectly with the top on the global liquidity cycle.
Hmm.
And then throughout 2023, 2024, we've been kind of putting in a bottom on this chart. And then we're expecting to, top out somewhere around the middle to end of 2025, which is the same thing that we saw in 2021.
Right.
So I think that this explains, why Bitcoin specifically has been pretty much outperforming everything. I mean, especially majors. Obviously, there's been altcoins and shit that have outperformed it, if you caught the right ones. But in general, like Ethereum is still, well below range. Bitcoin is still trading, $30 to $40,000 above the previous range that it was stuck in for a couple years. And it was able to do that without global liquidity being on its side. So Bitcoin is able to go up to 105, $110,000 within, not the perfect conditions for it to perform as well as it should, which is why we've been preaching, the bull run really didn't happen yet,
Hmm.
because until the global liquidity cycle is moving in accordance with it, it's fighting in favorable conditions.
Right.
So, we're trying to invest and expecting a asset class that's pretty far down the risk curve to perform well whenever we're experiencing quantitative tightening, and people, especially with the tariffs and all the news that's been coming out, people aren't really willing to move further down the risk curve. So with this in the position that it's in, yeah, I think it's going to be, I mean, 2025 into beginning of 2026 is going to be crazy because we got all the markers starting to move in accordance to what we want. And I'll show the PMI chart a little
Sure.
bit later too. But this is the main one I wanted to talk about first, and then you can take it.
So let's see here. Meaning they're nowhere near top. I assume numbers topping as well. Yeah, nowhere near top. I agree, Leaf. Of course not. Do me a favor, Bees. Put that chart back up real quick. I just want to, because I want to comment on this as well, and then I want to show you guys where we're at on Bitcoin. So keep this in mind, right? The global liquidity cycle, the global liquidity index. Why is it so important? So Logan was talking about how it's has to do with the central banks around the world, and when you look at things in a grand scale, so what's going on in the entire fucking world, and how do the biggest players in the world affect market conditions for everybody else? Because as individuals, as retail investors, as we all are, we can't personally affect the price action of the major markets of the world. That's just not what we do. We just invest in what we think is going to go up over time. And then if the conditions are favorable for us, we make a lot of money. So who are the people with the most liquidity in the world? Well, the Federal Reserve, the Fed, the Bank of Japan, the European Central Bank. All these major banks across the world are the ones who have the most liquidity. They're the ones who print the fucking money, okay? So what happens is we end up timing up these cycles, these Fed cycles with the other central banks across the world, so that there's expansion and there's tightening at basically similar times. And so what you had seen since COVID, because they had to get so aggressive with money printing, inflation was out of control, et cetera, the Fed went through a quantitative QT, quantitative tightening cycle, along with other central banks across the world. So they were raising interest rates, making money more expensive to borrow, therefore taking liquidity out of the markets, therefore making less people want to spend money or get loans out to spend money. And so what that does is that slows down inflation, but that also slows down markets. That's why we get the bear market in 2022. Okay, so we got the 2022 bear market. So what you're seeing now is now they're easing the interest rates. Now they're bringing down the interest rates, and they're starting to stimulate spending and growth again, which is inherently bullish for small cap companies. Because small cap companies, small cap industries like crypto, what do they need? Well, they need to be able to borrow money to be able to grow their businesses. So if they can borrow money at a cheaper rate, they're going to borrow more money. They're going to grow their businesses faster. It's inherently bullish for risk assets. So that's good. So that's what we're seeing start to happen. But right now, the Federal Reserve, is still doing QT. They're still in a tightening cycle where they're offloading their assets on their books at the Fed. They're offloading assets and creating a downward sell pressure in U.S. markets and in markets across the world. So we looked at the number. The number was $55 billion a month in downward sell pressure from the Fed themselves, right? The Fed. So what happens when we stop QT, which is looking like it's going to happen later this year, which is going to be fucking huge for our markets? Well, $55 billion in downward sell pressure every single month is significant. So we're fighting against that. We're fighting against poor liquidity conditions, right? So when they even just stop the tightening cycle for the Fed, that's $55 billion in sell pressure that's going to leave the markets, which inherently is a net positive for liquidity, because now there's no flush of that money out of the markets. That 55 billion stays in every single month. So it's a net positive for liquidity. So now what you're seeing this year, and the way that this liquidity cycle times up, is we're going to get further rate cuts throughout this year, and likely get an quantitative easing as opposed to tightening from the Fed and other central banks. Now, even better, if we can start to get them to inject liquidity back into the markets, which means that they're starting to now grow their assets, their portfolio at the Fed, which they said was they want to keep it. The Fed wants to keep it as a percentage of the overall GDP of America. So as the GDP goes up, they're going to start to grow their book as well with GDP. So that means now the Fed, as opposed to making $55 billion in sell pressure, now they're actually going to start adding liquidity back to the markets. So putting money into the markets, which is inherently bullish for us and everybody else. So we've been fighting against that sell pressure and those conditions these last 3-4 years. Now that this is all changing, this is when you're going to see the real fucking outperformance. This is when you're going to see the real bull run. People, we haven't even seen the real fun yet.
Yeah. Yeah. I mean, and I think too, something to mention is the Global Liquidity Index. Whenever we were looking at it last night, the one stat that stood out to me quite a bit was they said that over the past, I believe, 10 years or 15 years, may even have been a longer time frame than that, it's had about a 94% correlation to the NASDAQ. So as much as people in the US fail to pay attention to anything else going on in the world or pay attention to whatever other countries are doing, other countries are paying attention to the United States.
Right.
So whenever the Nasdaq is moving in a positive direction, it's signaling to the rest of the world that economic growth is strong. That there's probably not going to be tension, there's not going to be a war, there's not going to be a recession, and those people are confident enough to continue injecting liquidity into their economies, which also creates enough confidence in investors to move further down the risk curve.